This conference will now be recorded.
Hey guys, welcome to the Equity Trade Room. It's November 3rd. November 3rd. Just wanted to make a quick video. I wanted to highlight the importance of being patient when waiting for your setup, especially if you're trading using the smart money concepts, methodologies. Obviously, there's different interpretations when it comes to the smart money concept methodology, but they all have one common theme, one common principle, which is you have to be patient. Everybody talks about sniper entries. Sniper entry comes from being patient and waiting for the prey or the price to come to you. One thing I've noticed in the many countless trade rooms that I've sat in, as well as my trade room here that I'm moderating, traders are extremely impatient and want action, rightfully so. However, with this particular strategy or methodology, that's the worst thing. That's the worst type of emotion, being impatient. You have to be patient because if price does not come to you, you don't have a trade. If you chase a trade, you're not trading smart money concepts. Today was a perfect example. The trade room opens at 8:30 a.m. Eastern Standard Time, right here. We did not get triggered. Our smart money concept strategy, the order block, did not get triggered until here, 10:48. 8:30, 9:30, 10:30, almost 11 o'clock was when we finally got triggered. There was a scalp here, but this was not smart money concept. This was my own personal scalping strategy that presents itself once or twice a week. It presented itself on Monday, I believe, and today. This trade was a scratch. So it wasn't a winner or a loser. It was a break even, basically. Actually negative when you factor in commissions, about 20 bucks or so. As far as the smart money concept scalping strategy that I use, that did not get triggered until here, 10:48. So we had to sit around and wait for a couple of hours before price came to my sniper entry. I didn't chase it down here or down here. I waited. And unfortunately, traders become impatient. They want action to happen here. But that's not the case when it comes to smart money concepts. Let me just break down this trade for you guys. Here's the order block, this yellow candle, bullish candle. You got the drop. You got the drop, no mitigation on the impulse candles down, broke structure here as well as here. Now, normally on a 1 minute chart, I'm not going to take the 1 minute order block. I need a little more confluence. I need something else there, not just a 1 minute order block. I like the 5 minute and I can refine it down. Look for a 1 minute inside the 5 minute or just take 50% of the 5 minute order block. However, if it's a 1 minute order block, I need something else. That something else was this white dotted line here, which is the Asian range low. This white dotted line up here is the Asian range high. So that was the confluence that I needed. So this was a pretty big order block. when we draw the risk reward, it's about 150 bucks, this box. I like to risk around 100 or so bucks per trade. This would have been 150, but I like to trade 2 contracts. So 2 contracts on this setup here. If I would have placed 2 contracts at the bottom of the box here, this pink arrow, I would have been risking $300. So I wasn't going to do that. I was content to risk 150 here. And then I shrunk my order block 50%. So 150 to 75 bucks right here. So now I have my setup. I have my first entry here and my second entry is up here at the 50%. Because we had this Asian range low, basically in the middle of this order block, I put my entry for my second contract at the Asian range low, just in case price hits the Asian range low and bounces straight down, which is actually what it did. It hit the Asian range low and bounced straight down. But it did turn back around and actually come into my 50%. So either way, I would have got triggered on this particular setup. So I had one entry here at the 1 minute low of the order block, and I have my second entry here at the Asian range low, which is basically in the middle of the 1 minute order block. My targets, first target is down here. This is 1 to 5 based off of this 50% zone, risking 75 to make 375. The second dot is right here. This is my first target. Why here? Because this green line is a major pivot. It's the prior month high. And price tends to react at certain key levels during the trading day, trading week, trading month, etc. So I had it first target here. Now it's already after 11 o'clock as this entry here starts to play itself out. And by the time it made it down here, it's at 11:06. And I like to get out of here like 11:30. So this was the last trade of the day. I took my first contract off here because my mind was made up that I'm not going to sit around and wait for price to come down here this late in the day. Once again, I like to be done before lunchtime, East Coast time. So I took a contract off here, and then price went down and actually hit the target, my green dot, but I didn't get triggered. So I got out immediately after when it started to shoot up. Because as you can see, it came down to the prior month high. And what did it do? It went up. Same way it went up here, hit the Asian range low, and it reacted briefly down. Did the same thing here. Came down to the monthly high and then reacted strongly off of the monthly high, going back up. And it actually went all the way back up to my entry. All the way back up to my entry. And then eventually it started to come back down again. So my patience was rewarded. We sat around for a couple of hours and we left with a 230 profit on this one trade here. So lesson of the day, once again, especially in trade rooms, you might not get it set up every day, but at least you know if you wait for the high probability setup, your chances are a lot greater than just rushing to take trades or basically low probability setups. All right, guys, good luck with your trading. See you Friday.